Meanwhile, gold prices staged a comeback on Thursday. Gold futures posted their biggest one-day gain this year, rising more than 2.7%, erasing almost half of their recent losses. And driving today's rally, physical demand for the precious metal, prospects of more central bank buying, and a weaker U.S. dollar. Joining us now with their views on gold are Christopher Henwood, founder of the HenwoodEdge.com, and John Allison, CEO of Unio Holdings. Gentlemen, thanks for joining us again. Chris, we'll start with you. You're quite bullish on gold. Yes. Now, today we saw an increase. Also, after news came out that a few central banks added to their purchases, including Russia and Turkey. So do you think this was the reason behind the correction, or do you think that there's another element at play here?
I think correction is the right word. What we've seen, the big sell-off in gold, is a correction, a long overdue correction in the market, in my opinion.
But yet you're bullish.
Oh, longer term, absolutely, but no market ever moves in a straight line. So what we've seen now is what I think is a healthy correction from the overblown prices that have been sustained for probably a year too long. So with central banks stepping in to buy in the big sell-off, that's a signal to me that this thing is not in a bear market. We're not going to be heading lower for indefinitely. What we're looking at is a correction, sideways movement, and then I believe the gold market will start to move higher.
So what price do you have at the bottom?
I'm looking 1240, 1260 is what I project as being probably a reasonable bottom for the market, and that won't be an absolute number. That'll probably be a settlement number.
John, what do you say?
I think we're in a long-term change in the way in which gold is valued. And I think we're in this long-term change because I think inflation actually, contrary to a lot of people's views, is not going to kick up. There's a lot of money in the system, but it's actually not getting out into the system. Like a garden where you have a tank of water, but the hose is not spraying the water. I think China, is slowing down in a long-term way. I think that's going to have a negative effect on commodities long-term. That's going to affect gold. I think energy, there's abundance of energy. I think energy prices are going to go down. So for all those reasons, I think gold's in a part of a long-term downtrend.
But yet you say that gold, and I quote you, is the ultimate fear trade. So is the fact that we're seeing a bit of a sell-off showing we're not that fearful? And should we not be so fearful? There's still a lot of geopolitical uncertainties hovering around.
I agree with you. It is the ultimate fear trade, but in the end, I think people are beginning to recognize that there's actually fear in gold itself. It's something where people project their fears, but it's not necessarily the place where people's fears can get assuaged. So I think part of what's occurring now is people are wondering, maybe this is not the place where I can hide, and there are other places I've got to go.
Well, gold is down about over 11% for the year. Is that because investors are not getting as much of a return on gold as they did, and they're looking to put their money in equities and are not so concerned or fearful at the moment?
I think getting a return on gold is kind of the wrong paradigm or the wrong approach to take with gold. Just as John mentioned, fear trade with gold. People looking at gold as a safe haven. I've heard that term used, and it drives me a little bit crazy, to tell you the truth. Because it's not a safe haven. It's a commodity. It's a commodity being used as a financial instrument.
But if the world comes to an end and if all the markets collapse, and there's been a lot of doomsday foreseeing, then you want to be in gold, or that's at least what a lot of people would tell you.
You want to be in
Hence
gold
the safe haven.
Gold market, or do you want to own actual real gold in your hand? It's two different things, and I think we get confused sometimes. In the market, gold is an instrument. It's being used in a variety of ways. It's not an absolute store of value, and it doesn't pay a dividend. It only increases the value if the price goes up.
So do you agree with Goldman Sachs saying that gold's nearly 15-year bull market run is nearing its end?
No, I don't, actually. I think it's what we're in is a correction. And I think Goldman Sachs is maybe overstating what we're looking at right now. In a longer term, Goldman likes to come out with definitive statements.
Right.
And I don't think in the commodities market you can have overly definitive statements. And that's what gold is showing us.
Now, gold is traditionally a hedge against inflation. Now, there are two elements at play here. On the one hand, we haven't seen much inflation because of your water tank hosepipe analysis. But on the other hand, we've got central banks stimulating and stimulating and stimulating the economy. So why is gold not rising on that?
So I think people think that because the central banks are pumping lots of money into the system, that somehow automatically inflation is going to come. First of all, let's assume inflation did come. I think the bond market would correct that very quickly. The bond market would rise, and it would put a stop on what the Fed or the other central banks are doing. But I think the thing that people are missing is that the money is going into this tank in the garden. It's not coming out into the hose, into the general economy. And I think that's the reason why you're not seeing gold and inflation come together. And I think it's puzzling people. And I think they're going to remain puzzled. I think there are other ways to gain safety besides gold. I'm not saying it's a very interesting commodity, but I agree with Chris.
What are the other ways to gain safety then?
Well, for one thing, I think, it's a subtle world, and every time you get a wonderful company, for example, that goes down, I would be sitting there pouncing on that wonderful company that's going down. Bonds, people don't realize that in the past few weeks, bonds have rallied about 30%. They went up to 2.2%, and now they're 1.69%, the 10-year bond. So I'm not a great fan of bonds, but there are lots of assets that are out there.
Okay, let's bring it back to gold very quickly. Jim Rogers says if gold drops below 1,300, he's a buyer. Yes or no, very quickly?
Well, like I told you, 1260, 1240 is my area. I'm not an absolute buyer. I believe in just scaling into position, buying when opportunity presents itself. So yes, I would buy in the low side.
John?
No, I know Jim Rogers, wonderful man. If it goes to 1,300, it's going to 900.
Okay.
You want me to be definitive, right? There you go.
Very definitive, and Jim Rogers has a lot of support on this show as well.
Great.
So thanks very much. Our thanks to Christopher Henwood, founder of thehenwoodedge.com, and John Allison, CEO of Unio Holdings.